Good morning, everyone. This is Brad Matheny. This is a special video, particularly highlighting something that I deliver to my subscribers. But I'm going to share this with everybody. And I just want you guys to know that part of what I do is a lot of research, and part of what I deliver every week, every day, are my cycle patterns. Cycle patterns are predictive price patterns that occur throughout the week and throughout the day, throughout the weekend as well. And you can see we've had some really great calls this next couple of weeks, or this last couple of days, and going forward. We had a momentum rally 2 days ago. We had a gap up breakaway, had a gap up lower bar yesterday. Today was a topping pattern. I mean, just take a look at the what's happened here on the SPY. This is a daily chart right here. So let me get this back down here into range and take a look here. So we had a Monday gap up breakaway. So here is Monday gap up from the actually gap down. This is just a gap breakaway. Sorry. So there's our gap. Monday, here's our Monday. There's our gap, and up, didn't quite break away. Next day, momentum rally 012. Here's our momentum rally. Nice, perfect. Next day was a gap up lower. Here's our gap up lower right here. Again, nailed it. Huge gap up on CPI data and trended downward throughout the day. Today, we have a topping pattern in trending mode. Now, a lot of these are counter trend or carryover. But again, what this is telling us here is that this is pausing and trying to set up a bit of a top. But the question I had from a member was about this bottom 103 pattern. So what I've done is I've gone through, and now understand, bottom 103s are really more like support. Okay, so here's a bottom 103 pattern, and I want to highlight what we're looking for. In an uptrend, a bottom 103, these are my anchor bars. When we get into a bottom 103 pattern, what we're really trying to do here, guys, is identify recent support. And the way you would do this is you would identify, this is a very long, fairly sustained trend. We have a Fibonacci unique low here coming all the way up to this level. We don't quite have this high. We have this high, and we have this high here, or low. So that gives us a support level right in this area. And of course, it's going to mark to bars. So I will just try to get that in as cleanly as I can. 382 to 50 level, just like I've been telling you guys. But you're also going to want to come in off of this support level and try to identify most recent support. So you have very clean support off of this recent low right here. And that gives us a very solid potential breakdown level. You could also come in and tag this guy as well. So now understand, and of course I will have to move that because I've got the anchor on. So what we're really looking at with this bottom pattern is that we're looking for support. And if support holds, we're going to get a rally. If it doesn't hold, we're going to get a pullback. So you can see here, here's another bottom 103. So we do the same thing. We come down here and pick this up to our most recent high. We don't know where that new high is yet. We then try to find our support, which is this 382 to 50 area. And of course, move this out of the way. And here's our lows, most recent lows. You can go all the way back to this guy if you want. Carry this all the way out. And then we have this gap here, and I would probably highlight this low here of the gap, either one, low or high, but I normally pick the low in an uptrend and try to say, okay, there's our support. So in this bottom 103 pattern, we saw a nice little rally. And this is what's going to happen when it follows through. When you get a bottom 103 rally and it follows through, you're going to get a nice little move off of the support level. When you get a bottom 103 level and it fails, you're going to get a rotation. So now we can take a quick look here at all the bottom 103 patterns going back over since January of 2022. That's about 2.5 years. Okay. And you can see we got, failure. So I'm going to just draw here. You can see here this rolled a little bit and then failed. This failed almost immediately. This failed almost immediately. This rolled substantially higher. This failed almost immediately. This, given our support, rallied a bit. This, given our pullback here and our recent support, did prompt a bit of a rally. This did catch a bottom fairly solidly, but did get below recent support. This was moving higher. This was moving higher. This failed considerably. This failed in a downtrend. Now, what's the difference here, guys? This failed and this failed. Okay, so now let me come in here and try to change these guys to green if they're successful or fairly successful. And what you want to remember here is what is actually happening is that we are seeing dominance of trend. Okay, failure, 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 rally, and failure. So we're seeing dominance of trend. We're getting these bottoms. They hold up pretty well. We get some follow through, and you can see how we could easily set up in each of these locations. We can easily set up resistance. Oh, I got to get rid of this. You could see we could set up very easy. So here's our bottom. Here's our recent low. We set up a support level right in this area. Turn around and say, hey, we've got a bottom. We can try to catch a rally out of it. I'm cutting our losses here. Okay, we've got a bottom over here. It's rolled down. You can see that we have support here, support here. And again, I will move this a little bit like this so you can see it. So here's our bottom pattern, supports here, supports here. You come in here and I would say, okay, bottom, as long as we hold this level, we're okay. Another bottom here, as long as we hold this level, we're okay. We come down here, get a bottom. We got a nice low support level. We look for a gap. We have a gap right here. We have price rejection right in this area and price rejection in this area twice. I would say that we would be looking right in this area for support for this bottom pattern. And remember, you read these as almost a sentence. Okay, so look at next week. Next week, we have a trend, gap breakaway. So we go into the weekend. Momentum rally, gap up lower. Okay, weekends, the way I look at weekends is it's the psychology of the market, and it's not necessarily going to reflect in price bar activity because markets are closed. So we come over here, we get a gap breakaway in trending mode. Trend is bullish, explosive, bullish. Okay, get a Harami inside bar. That's normally a very tight, narrow inside trading bar, kind of like this right here. Make sure I'm still drawn. Okay, a Harami bar is, where was it? I can find others. Here's a good example of a Harami bar right here. Okay, here's another Harami bar. Here's another Harami. Here's another Harami. Here's another Harami. Here's another Harami and a second one. And here's another. Here's another. Nope, 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 nope. Yep, body within a body, body within a body. Body within a body. That's what Harami means, a body within a body. Okay, so when we come over here and we see the Harami line, we know it's going to be a fairly tight day in carryover mode. Crush pattern is typically a downward or an explosive type trending pattern. This is in trending mode. So I would caution traders that we may see a downward bar here on the 19th, but it could be explosive to the upside as well. trending gap potential on the 20th. Then we get a top resistance 21 on the 21st. Top resistance 21 means the market's going to try to rally up into a peak. So a top resistance bar normally is a rally up into a peak and then rolls down intra bar, meaning this is not a daily end of day bar, but it's like this. It rallies up, tries to find a peak and stalls, or rallies up, tries to find a peak and stalls, rallies up, tries to find a peak and stalls. That's what a top resistance bar looks like. So then we get down here to the 24. Well, let's go into the weekend consolidation, bottom 103. That's the pattern we're looking for on the 23rd. Then we get a up, down, up, which is in counter trending, which would be normally a down, up, down, or some kind of a what I call sandwich pattern. That's what an up, down, up is. Base rally 301, breakaway, carryover, crush. Then we get flat down, breakaway, rally, rally. So you can see here early July, moving into Q2 earnings, we get a rally mode. We get a lot of consolidation, little base rally here on the 25th that may move the markets higher into the end of June. And basically, we get our topping pattern today, and we got flat down. Then we get basically consolidation through the 18th, moving into a potential big bar on the 19th. Then we move into a gap potential, which could be volatile, upward trending, leading towards a top resistance, meaning price rallies, finds a peak, stalls, and rolls downward into this mode right here, into this 24th, 25th, 26th mode. So again, what we're doing with these patterns is we're trying to read them as a sentence. And as I'm mentioning to you, this bottom pattern, this bottom 103 pattern, is really an indication that, hey, here's the bottom pattern. You can see that it's kind of in an uptrend and it's setting this lower rotation up. So what you would be doing is looking for, I'm in drawing lines. You kind of want to pick your support level, and you kind of want to see if we've already got higher lows moving higher. And if so, as well as higher highs, if so, then you've got a potential bottom setup. If you get a bottom setup here, where this is a real bottom 103 pattern right here. If you get a bottom 103 pattern in a downtrend, you want to try to determine your support level. Again, it's this low. We can see it as price rejection right here. See how it's rejected and moved upward and comes back down, tries to get below it, rejects again back to the upside. So as long as this support level is holding right here, this is a bottom warning that the market's going to try to set up. So here's another bottom warning. Where's our most recent support? Yeah, we have decent support here, but we have to come down into this area to find support and price rejection. So our support level's really kind of in this area, almost like a box. And then we have another bottom pattern right here. And of course, we have our support level down here. Price comes down, rejects off the low, rejects off the high, rejects off the low, comes back. I would be looking at rejection in this area. So this pattern right here would have to stay above this upper gap and above this level in order to see upward movement. Now, other patterns happen after this. So you can see what we're looking at here with regards to bottoms. In an uptrend, we have higher lows all the way up. We have higher highs all the way up. And where we end up here is we end up with a bottom pattern right here coming back down off of these lows. I would suggest this rejection area right in here gives us a very key support area. And then you would have to watch this gap. You have a little gap here, but I would more so watch this gap area here and essentially watch to see if we get follow through. At this point, when we get into this mode here, we're seeing downward price trend below this level. And really, at this point, the pattern doesn't look like it's going to continue. We get lower highs, lower lows. This is a warning that the bottom pattern has been breached to the downside. Same thing here. It's in a downtrend. We have our support resistance areas already. Doesn't look very opportunistic. What we want to try to do here, guys, is catch them in an uptrend, like I was showing you, and these downtrend patterns really can be traded as a failed break of support. In this case here, coming down to target this support level here, that gives you a nice solid, from this level or this level, it gives you a real quick, it's a 1.5% downside move on the SPY, but it's actionable. And a lot of times it's actionable, like for example, here. Okay, we're already down below. We've got these lows here. So now we have to go back here. Where do we find support? We come back over here. There's a gap right here. So we would look at this gap coming across. We would look for any other rejection. You get rejection here, rejection here, rejection here. So I can see this as rejection. And then we get this rejection here, this rejection here. This sets up another rejection area. And at this point, this bottom right here is in a downtrend. We're getting lower highs all the way down, lower lows. So we're really not looking at this as a base. We're looking at it to see if it holds, if it provides any support, great. Otherwise, it's going to try to break through any one of these resistance areas that I've highlighted and try to move downward into these target zones that I've drawn. So here's your target zone. And again, just by looking at rejection, all I'm looking at is rejection. What does rejection look like? Let's talk about that. So come back over here. Let's move this, spread this, and try to. What does price rejection look like? Normally, to me, price rejection is when you get price moving in a trend, stalling, and then stalling possibly twice. So it's really got to stall twice. Then potentially coming over and forming some extended confirmation, possibly even while being supported by a gap that's occurring right here. Can you see that, guys? So let me get rid of this. Here's the gap right there. And it is being drawn or forming right at rejection, being rejection. So this then becomes a very solid price level. And look, wow, it even comes back here and confirms off of this rejection. And I could probably go back, literally, I could probably go back and find dozens of examples. Oh no, look, more rejection here, a gap through it here, and then big rejection here with a gap. So look, I can carry this all the way back, showing you rejection up in this area, false move, called a scouting party, rejecting, coming down, two little dojis, coming back down here, rejecting, gapping, rejecting, coming back down. So now let's get rid of these. Okay. Let's get rid of some of these and show you a little bit about what's going on right here, because we are entering into a very interesting little scenario here. We have rejection in this area, okay, which is occurring right here, which then carries forward right through the gap. Okay, now Control C, Control V, we have rejection down in this area here, which is occurring right here, acting as rejection right here, and another gap right here. Okay. And we can probably find these over and over again as we get these rejections here. We get this gap window here coming into this rejection area here. So you can see the range from this rejection, stall, stall, rally. That's rejection. So the range from here down to this gap essentially creates up a window for this gap over here and matches the rejection area back over here. So price rejection is very important to understand, in the sense that, here we have rejection right here. Okay, we come up, rejection, confirmed rejection, confirmed support, which is rejecting this low. So guess what? This then becomes a rejection area right in here. And price rejection is a matter of essentially price battling it out, trying to move forward. But what we're doing with this bottom pattern is trying to show you the value of understanding these types of patterns. And remember, today we're getting a topping pattern. So let's come over, take a look at our topping pattern, and look at where we're at. While we're at it, let's take a look at rejection. Very big rejection in here. You see, rallied up, stalled, rallied up, stalled, open much higher, stalled, rallied up, stalled, rallied up, stalled, trying to get above it, then finally broke. Very good confirmation of price rejection, kind of in this area here. We're up above it. We have a little stalling here, but we rallied. Okay, now we're getting a stalling pattern here. So this is maybe a potential rejection area here setting up. I'll just label it as potential, not really banking on this being rejection right away. And as you can see here, so here's a good example of rejection as support. Comes down, bounces, comes up, tries to hold an upward trend, opens dramatically lower and is completely rejected back to the upside, rallies to a new high, tanks back down into this area, gets rejected again. Okay, guys, clean rejection. Also, mapping over here with a gap. So now let me come back over here, and there's our gap. Back through the rejection here. Look at this rejection. Rallied up, stalled. Big move to the downside. I mean, absolutely stunning downward pressure here. But what happened? Completely rejected. 2 bars later, we're back up at trying to close at a higher high. What happened up here? Rejected again. Back down here, back into the lower level. Rejected again. Gaps up, and we're off to the races. So this whole area is price rejection, which acts as support resistance. You could measure it all the way down to here because of this low of this doji and this little gap over here. But see how it then carries into rejection over here. And of course, we end up getting this upper rejection right over here. So coming down, up, rejection, down, up, rejection, down, breakaway. So where I would tell you we have this rejection area in this area is probably right in here, drawing it as a moderate resistance channel. And of course, if I were to drag it back, you would be able to find other areas where rejection comes into play. Okay, and you can see even here, comes back down, rallies, comes back down, rallies, rejection. So again, rejection is the whole idea that price must move, and it comes down to Fibonacci price theory, which is Fibonacci price theory means that price must move, attempt new higher highs, and or lower lows at all times. This sets up a scenario of A, success is trending, continued trending, or B, failure is price reversal, and that can often lead to rejection. Price rejection. So everything we're doing in here is basically the idea that price is trending. So here's our example. Price is trending. We get rejection. We get rejection. It's trending, consolidating, little rejection, trending, rejection, 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 breakaway, trending, rejection, trending, rejection, rejection, trending, rejection, 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 sideways, trying to reach a new high, rejection, 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 finally breaks down, rejection breaks down into a new trend. This is again rejection here, and back into trending. So this is trending. This is rejection. This is trending. This is rejection. This is volatile rejection into trending. Here we have trending moving into potential rejection right here. So you can see as we move in here, this was a labored upward trend, but you can see we're still trending very cleanly to the upside. We get our rejection, we get our volatility, but when we start to move sideways in periods of price sideways trending, for example, like this, what this is, and here, what this is, ladies and gentlemen, is this is essentially price attempting to break away from rejection and consolidated ranges, attempting to move back into trending. You may get these little false moves, kind of like you did here and here. You even got one here. You got one here. Was really a leading move. You got one here. These types of false moves happen, but remember, the same process applies down to any time frame. So if I come back into here, try to remove all drawing, which is sucks, but we'll deal with it because I wanted to keep a few. Then we come in here, keep active. And I want to come in here and show you that we do the same thing. Okay. Here's our big gap. Wow. Okay. Now we look for rejection. We don't have any historical bars we can look at. This is a 15-minute bar. I see rejection here. I see rejection here. I see deep rejection here. So very easy for me to come in and say, here's my first level of support rejection. Here's rejection here. So I can easily come in here and label this as a rejection area. I can easily identify a consolidation range here. So I will nail it from basically here to here and say this is a nice solid consolidation range. And we have yet to break out of this range. We had our topping, our big gap up move, rolling up to the top, coming over, false attempt to break out, major rejection, coming back down into moderate trending here, major rejection, coming back up into moderate trending here. More than likely, we've got about an hour to go in the markets, and more than likely, we're going to end up stalling out somewhere down in this area, calling it the end of the day and trying to hold up above this gap level, because remember, this huge gap level here ends up being a massive window. I'll go up to here, a massive window for price to attempt to try to come down and fill this area. If it doesn't, it will continue to rally higher. If it does come down here and fill this, it will more than likely lead to support being reached in this area, which again is, what is it, guys? What is a major support area? Check it out. Rejection, rejection, rejection. So right over here, you're basically getting a solid support channel built up already because of price rejection. So you can see how if price fails below this support level here, then it will likely, as price is always seeking new highs or new lows, if it fails in this area and breaches this lower rejection area, then you're looking at a very clean, quick move down about 0.75%. Okay. It's just price. Price tells us everything. Okay, guys, 30 minutes. Hope this helps. Talk to you later.